Hi, Greg Dorsey here. It's Monday, October 4th at Leeb.com, Leeb.com. Well, traders are looking for a breakout above the psychologically important 1150 level in the S&P 500. We'll have to wait a while longer. Stocks kicked off the week on a down note, falling 0.8%, with every industry group printing red on the day. The selling was fairly one-sided, with declining issues outpacing advancers on the big board by a 7-2 margin. Interestingly, we didn't see a pickup in volume today. In recent months, the pattern has been light volume up days, heavier volume on down days. Likewise, small cap stocks actually outperformed the blue chips today, which is a mildly encouraging sign. So we won't write off a breakout above that 1150 level by any means, although the intermediate term downside risk is still quite high. Also down today were commodities, which wasn't too surprising given the run they've had of late. As a group, industrial commodities reached record highs last week. So imagine what they'll do if the U.S. and European growth actually picks up steam. Of course, the bond market sees little chance of growth actually accelerating meaningfully anytime soon, with yields on 10-year treasuries below 2.5%. Setting the tone for the day, U.S. factory orders declined by 0.5% last month, though excluding transportation, orders were actually up 0.9%. Economic data will be somewhat light this week, although traders will be eager to learn the latest on the employment situation out Friday, when the overall jobless rate is expected to tick up slightly. We'll also see the start of quarterly earnings season this week when Alcoa reports after the closing bell on Thursday. So it should be interesting to say the least in the next couple of weeks. The market will also take a cue from the U.S. dollar, which rallied today after reaching extremely overbought conditions. The last two times we were so oversold, back in May and August of 2009, the counter-trend rally, I should say, lasted a few days before the selling resumed, with another round of quantitative easing seemingly on the way. And for that, we would reference the recent Fed policy statement, as well as New York Fed President William Dudley's comments last week, that this time around there will be, there are other countries that are eager to debase their currencies. So the greenback's bounce is not or decline is not a given right away. We could see this counter-trend bounce last for a while longer. That's it for now. Stop by again soon, and we'll have more for you.